Okay, hello everyone, and welcome to our webinar, Who Needs Robinhood? How Fairmint is Reimagining Finance via Stakeholder Capitalism. I'm your host, Lou Kerner with Big Token, the leading mobile app for users to own and monetize their data. And we've got a great show for you today featuring Thibaut Favre, CEO and co-founder of Fairmint, and Joris Delanoux, Fairmint COO and co-founder, and Gil Hildebrand, founder and CEO of Gilded. Excited for the show. I first asked Thibaut, I think, to do the show about 4 months ago. I was so impressed with the idea behind Fairmint. Now that Gilded, another company I'm a fan of, is leveraging their platform, I knew we had the makings of a great show. So each of the companies is going to present for about 10 to 12 minutes. And after that, we'll open it up to questions from the audience. So if you've got a question, put it in the chat function on Zoom. And if we pick your question, we'll bring you up on stage, open up your mic and your video so you can ask the questions yourself and any follow-ups. It's obviously all very casual. With that, we will hand it over to who's going to do the presentation?
I can start.
Okay, so I'll hand it over to Thibaut, and there you go.
Hey.
Take it away, Thibaut.
Yep. So let me share my screen real quick. So yeah, very happy to be here. Yeah, just like very quick, like a short presentation on Fairmint. So basically, what Fairmint does is like we make equity programmable. Just to present ourselves, maybe like a quick introduction. Joris, my dear beloved co-founder, maybe you want to start introducing yourself?
Sure. Hi, everyone. Thank you, Lou, for having us tonight. Yes, so I'm Joris Delanoux. I'm an entrepreneur since more than 15 years now. I've been building companies before to launch Fairmint, and obviously Fairmint is not like something that we launch because we woke up in the morning thinking about it, but more like the result of all those years of entrepreneurship, looking for ways to have our employees, but also partners, contractors, anyone that was in the ecosystem in my previous businesses, to make sure that they would one day access to the upside of success of the companies that I was building. And so when I sold my second company in 2016, I jumped in a plane to join the Singularity University in Mountain View. And the goal there was really like to work on moonshot project. And the one that I chose was basically this idea of a more stakeholder-centric capitalism. And after that, I started to build an exchange for startups using SPVs. And that's when basically I realized that blockchain and the work of Thibaut with continuous organization would be a great fit to continue the project. And that's how we started to team up. And we did building Fairmint. Go ahead, Thibaut.
Yeah, so Thibaut, so I'm a software engineer by trade. So I have a degree in corporate finance, and basically, so my first startup was started close to what Joris did. So it was an app store for PC. It was called All My Apps. So I built it, developed it for like 6 years, sold the company in 2014. And right after that, like created something totally different, like a non-profit in France to crowdsource the best candidate for the French for the French presidential election. And that's what got me back into crypto. I became then, after the election, I became a partner at a firm, and I was in charge of everything crypto. And this is when started having the idea behind a continuous organization, which would become Fairmint. And once we teamed up with Joris, so we went on a big retreat to make sure we are the right co-founders, right? So we went on a big retreat to align our ambition, align our vision, and clearly what we wanted to do is like decentralize access to wealth. And once like we were clear that we wanted to work together, like we went and interviewed like close to 200 people, like investors, entrepreneurs, and stakeholders, and basically the gist of it was like, okay, we need to find a way to give more control to founders, to give more liquidity to investors, and to give access to stakeholders. So that's really the three pillars on which like Fairmint is built. And obviously today it's not easy to do that with once equity, because equity is like there's a lot of friction, and so this is where like we decided to create a new layer of equity that would enable founders really to turn their equity into their most powerful community engagement tool. And so letting them invest, purchase, and earn equity in a very frictionless and easy way. And maybe I'll let Joris take it from here.
Yeah, sure. Thanks, Thibaut. So, yeah, like Thibaut said it, equity is clearly the common denominator of all the expectation from all those people that we interviewed, but it bears so much friction. And obviously, the goal for us was like, what was to work on what was the most innovative way of making and playing with equity. And clearly, the work of Y Combinator with the SAFE, setting some standard term plus creating a layer of future equity was the smartest way. And that's how we started to work with this idea of building the layer two of equity. And right now that's exactly where we are, because using the blockchain, it allows us to create like literally a layer that is fully digital, fully scalable, transparent, and traceable. And that's exactly all the things that we wanted to bring inside the project. And obviously, to run this, we wanted to make it like fully compliant. So we had a huge and deep work on the legal to make sure that we would digest entirely all those exemptions that exist in the US for a company to literally raise money. And we literally made the work to make sure that that would be reflected in the software. And then we created the condition of a true market, using this idea behind the continuous organization and the white paper that we released 2 years ago, where basically we create an AMM type of primary market, so an automated market making mechanism to literally run a continuous offering for the primary market. And the software is all battery included, with the obviously the ID verification and all the detail to comply with the finance industry today. And that condition of creating a market is absolutely key, because it allows absolutely anyone to come at any time and to invest in this new layer of equity to get a stake in the company. And obviously, that means for the company the opportunity to issue directly from their own website, where they have the connection with their community, to issue their own securities. And these securities will be materialized by a branded ticker symbol. That means that when someone come and invest, he not only invest in a company, but he also own a stake, and a piece of the brand of the company. And that's probably what was key for us when we started to work on Fairmint, how to make sure that this community, these companies that run on internet, these SaaS companies, can literally build and create a completely new relationship with their entire community. And obviously, we
And
didn't stop there, because running a primary market was key, to let the people invest. But obviously, due to some restriction in the legal, depending on the exemption that the company will decide to use, sometimes it means that for non-accredited investor, they are not able to invest. And that's where we decided to create a condition for a secondary market. And still, we leverage the decentralized finance protocol being fully on the blockchain, and it allows us to create the condition of low volume with a secondary market. So that's also one of the pieces that allows the people to literally purchase on the secondary market. And so what's key to see with Fairmint really is we create the condition of your market on your own website. And what matters then was like, how can we leverage that for the communities, the people that are not able to invest and they don't have the money to purchase. And that's where we wanted to make sure that at one point, all those companies would be able to run a compensation plan for all those people. And rather than to just reduce that to the insiders, like it exists today with the employee stock ownership plan, which is reserved to employees of the company. I think it's really key that those compensation module would be available to all the freelancer, the contractors, the people that are part of the ecosystem, whether they are user, a customer, a partner. And obviously this is one of the way that we've been building a complete compensation module around those offering for the companies. And Thibaut, maybe you wanna
Yeah, so no, but that's perfect. I'll just end here, and just to link with like Robinhood, like the vision we have at Fairmint is that in the end, like we want to decentralize stock markets. Like, everything that we explained today means that tomorrow companies will be able to do IPO and to IPO directly from their website. When you think about it, like in today's world, like why would Airbnb or Coinbase want to go and list on the NASDAQ? Like they could just list on their own website. They have all the traffic in the earth they want. They would not lose the link with their shareholders. It's going to be so much better. And so that's the vision we're pursuing at Fairmint, is like enabling our customers to like become public companies from their own website.
So that's all super exciting. Just a few questions before we turn it over to Gil. So what's your business model?
Our business model is very, very simple. So we have a SaaS component. Basically, you pay per number of people who hold your security. And it starts at like $1 per month per security owner. So that's one part. And second, we make sure to be like fully aligned with our customers. So our customers like pay us 50,000 worth of equity at the beginning. So we get paid in cafes. So in this future equity. And so we're fully aligned with the success of our customers.
Yeah, we eat our own dog food since a while, obviously running our own offering, but it was also key for us to make sure that this idea of a stakeholder-centric capitalism would make sense, and even more make sense if we would consider our customers as true stakeholder in the company, and by owning a piece of their offering themselves, it aligns us completely with their success, and that is very key in this stakeholder-centric capitalism that we try to unveil.
Can you talk about liquidity? I mean, I think that's one of the super exciting things is even among public companies, most people don't realize that more than 99% of the publicly traded U.S. companies actually don't trade on the average day because there's no liquidity. If sellers wanted to sell, there's nobody there to buy. So how are you guys solving for that?
So this is where like being rooted in DeFi is absolutely key for us, because basically DeFi brought this new paradigm, like with the Uniswap, the balancer. So this what we call automated market maker mechanisms, where basically instead of just having like an order book with a buyer and a seller, you bring a third like agent, which is like the liquidity provider. And so this type of automated market making mechanism, they allow to have like immediate and predictable liquidity, even in low volume situations. And so this is where like we see that as like one of the most exciting things about like using blockchain and Ethereum in particular, is that we are able to leverage that to provide and let our customers decide to spun off a secondary market using these techniques, which are much more effective than traditional order book approach, where, as you said, most of the problem with like a traditional order book is that there's no liquidity. You need, if you want to sell, you need a buyer. If you want to buy, you need a seller. And if you don't, you need to pay a lot of money to get a market maker. And all of this is things of the past in the DeFi world, because like they are much more streamlined approach to creating liquidity.
Yeah, you guys pay very little to your market maker, right?
Oh, yeah, no, we don't. Close to zero.
So and just basically, I got to give a shout out. I'm a big fan of Uniswaps, but the AMM actually, first AMM out there was Bancor, and Uniswaps innovation was, instead of having to use the Bancor's BNT token, they allowed you to use Ether, which turned out was a better model. And then last question before I turn it over to Gil, because I know that you guys have been doing this for a little while now, including raising money for yourselves. So can you talk about the major learnings today?
Well, there's one that is absolutely key, and Joris, like let me know if you want to complement. But I think with most of our customers, and we were talking with Gil not long ago, is like this is really different than crowdfunding, because what the key thing is, like if you take Fairmint as an example, we raised $800,000 without pitching anyone, just by building and focusing on building a great product. And so it created a business momentum where, like, basically since September, like we receive more money than we spend. And that's just because, like, we keep focusing on building great product and shipping fast and shipping great stuff. And that is key. So we're not trying to create a fake FOMO around our fundraising because nobody cares. What we're trying to do is just focusing on creating a great product, and people notice. And when people notice, then they have the ability to invest at any single time. So I think the main thing is, like, don't treat a continuous offering as a crowdfunding company. That is not how it works. That is not the spirit of it.
And I mean, that is such a difference. And do you find it's hard for people to understand that?
Actually, what is funny is when you get VC to ping you, because usually, like, what's happening, like, when you get a VC to ping you is, like, at the end. So you introduce yourself, like what you do and all, and at the end they're like, okay, are you raising, and if not, when? And usually you're like, well, you know what, I'm not raising right now, maybe in 3 months, maybe in 6 months. But then by the time it's 3 months and 6 months and you contact them again, like maybe they're not interested, they switch to something else. And here, like, at every time if somebody calls you, you can say, well, actually, yes, we're raising, but we're raising at any single time. You can go online, invest.fairmint.co, and you can just raise. And you can just invest, like, you don't even need to call me. And that is game changer. That is game changer for founders. That is game changer also for investors. Because it means that there's more access. It means that if you're a VC or if you're just like a business angel that is not an insider, you have the same access to investing in the company.
Okay. Yeah, and also by the continuous aspect, it completely changed the arbitrage when you want to invest. It doesn't mean that you need to make a decision prior to any execution where you need to allocate and deploy your capital. It simply means that maybe you will just put a small stake at one point and you will come back 3 or 6 months later and check the execution. Did they work properly? Did the funding team do what they were saying? And probably you will be able to put another stake if you still believe in the company. And we start to see that pattern of people that started investing in February last year, and they came back during the summer, and they came back during fall to reinvest. And I think this is key because that's exactly the type of profile of investor that you want. Someone that is able to come back and able to reinvest, like the upsell, the up invest.
And what when they came back, had the price changed?
Oh yeah. Yeah, like if you take Fairmint, like one of them, I have one of them in mind. Maybe if he attends, like, hello. But he invested at the very beginning at 71 cents in February, and then he reinvested. I think it was like the price was around 2 in the summer, and so the first time he put like 1,000, and then he put 10,000, and lastly, like in October when the price was close to 3, like he put 100,000. And he just leave us a message. He's like, "Hey, I just pumped up my investment." so that was nice.
Good job. So yeah, that's key. That means that you are literally building this relationship, this continuous one. And so yeah, that's one of the big learn that.
And if I may, there's an anecdote also that is very funny because Joris invented something new. He invented the negative customer acquisition cost, because we've realized that as you have a continuous offering, that means that every time we sell, you actually sell 2 products at the same time. You sell like your service, but you also sell your stock. And so it's very often that after a call that Joris had with a customer, we see the customer coming and putting like a few $100 or $1,000 in the company. And so Joris invented the negative customer acquisition cost.
Congratulations. Just and one last question before Gil. So now, how many investors make up that said 850,000?
130.
130 investors. That's great. It's that's a nice broad investor base, and I guess it's getting broader all the time. So thanks for sticking around for the Q&A part. And with that, Gil, you should be able to grab the screen and share your screen.
Yeah, thanks for that. And by the way, you would never see 130 investors in a traditional fundraise, and that is why I am most excited about this funding model is because the stakeholder capitalism is actually the key innovation here, because now you can have a whole army of people on your side that actually benefit from your success. They want to succeed too. Whereas, you know, in the traditional model, you might have 5 people, you know, 5 companies who put up that $800,000. It is a totally different ball game. And, you know, that's why this model, I think, is really going to succeed. Just to tell you a little bit about myself, I've been a software developer for 20 years. I spent half of that time working on Squidoo, which was a company I started with Seth Godin. We paid tens of millions of dollars to people all over the world as part of that company. I built all the systems to do that. I saw how difficult it was to pay people electronically, to pay people internationally. And I just knew that there had to be a better way. So I'm going to switch over to a few slides I had prepared to kind of walk you through that. So, you know, the key thing that we believe is that business is global now. It's not unusual to have your customers and vendors all over the world. And it is true that businesses struggle with global payments. This chart here came from a Deloitte study, which showed the key pain points by CFOs for global payments. And the interesting thing about all of these pain points is they're actually ones that can be solved by blockchain. And I will get to that in a moment. The other interesting thing is that a study by McKinsey found that accounting is absolutely full of manual tasks. 86% of what accountants do can be automated, but we're not really there yet. And that's where blockchain comes in, because the old way of doing things, the way that we've been doing it for the past 500 years, which is what you see on the left, is that each company records both the invoice and the payment receipt in their own set of books. So there's 2 separate entries here. With blockchain on the right side here, you've actually got a shared single source of truth. And what that means is you can automate more of the accounting. But not only that, if you're using blockchain for payments, it's literally 100 times improvement over traditional payment methods, because you know you can send payments anywhere in the world instantly. You can do a lower fee. It's way more transparent. At the same time, you can actually see the payments as they occur. If you've ever sent a wire transfer internationally, you know that the money leaves your account and you never actually find out if it got to its destination unless the person you sent it to confirms that they got it. That's absolutely madness. And blockchain is really the answer there. But the problem is that it's not integrated with any of the tools or processes that businesses already use. And so how is a business going to be able to benefit from this? Well, that's where Gilded comes in. What we do is we take all of the blockchain stuff, your tokens that are on exchanges, your digital currencies. We're able to track all of that and then connect it to your legacy financial infrastructure, your accounting system, your payment processes, and just kind of make it all work together. Now, what exactly does that look like in terms of a product? So one key part of the product is invoicing and payments. So you can think of this just as a normal invoicing system or a normal payment system that you might have in QuickBooks or another accounting system. The difference is that when your customer goes to pay, they can choose to pay with a credit card, they can choose to pay with wire transfer, or they can choose to pay with digital currency. And we support many different stable coins, so that makes it easy for businesses. They don't have to deal with the volatility aspect of it. We're also soon launching a mass pay service, which will enable businesses to pay contractors and vendors globally using stablecoins. And this actually ties nicely into Fairmint, because when a business is raising funds using Fairmint, they receive USDC, and then they could in turn take that USDC, put it into or use it for being able to pay their contractors and vendors easily without ever having to cash out to fiat.
So, Gil, how did you first hear about Fairmint?
Well, that's actually a great question. They're a customer of ours. And I believe they're using this piece of it, which is the accounting piece of Gilded, where we're able to pull in all of your transaction data. We sort of reconcile it and make it easy to sync to your accounting system. And I believe, Joris had a need for that. Is that right, Joris?
Absolutely. That was absolutely key to make sure, working today with CFOs is cool, but if you bring them blockchain transaction that they are not able to integrate in their current accounting mechanism, well, that's probably one of the big failure, and that's the pain that clearly Gilded Finance is solving, and that was key for us. That's probably also key for all the customers of Fairmint that right now are using an offering and that start to have transaction directly on the blockchain. So yeah, that's clearly solving a major pain.
Yeah, so that's what did you call it? The negative customer acquisition costs. We have a great mutual relationship. They've been amazing to work with. And on the accounting side of things for Gilded, where we really shine is we've got a CPA on our founding team. No other company like ours has that. We also have an investment from the AI CPA, which is the American Institute of CPAs. They have 650,000 members. And so because of that, we're really the experts at integrating digital currency into your business and making it all work. And we've been pretty successful at that. We've been growing our customer base, month over month, and that has led into our next capital raise. Previously, we've raised funding from Techstars, from the AICPA, and from angel investors on the SAFE. And we knew it was time for a capital raise because we're really ramping up our traction, and that's why we created our CSO, our continuous security offering on the Fairmint platform. And so I want to share the results of our first week because we launched it last Monday. And bam, we raised over $165,000 in the first week. And this is the most fascinating part is if you look at the dollar amount, we raised most of that from our customers, which is insane. We're not expecting that. We thought maybe one or two might pitch in $1,000, but that is not the case at all. It was almost all from customers, mostly global too. And we haven't done any pitching. So we did put a video up on our announcement post explaining, what we do. That was a pitch, but we don't have one-on-one meetings pitching people. And it's also something that our existing SAFE investors, they're emailing us all the time and saying, when can we switch over to the cafe? We're interested in this. And basically, we just haven't had a chance to get them rolled over yet. But they see the benefits, we see the benefits, and it really just makes a lot of sense. So it's been super successful so far, and the Fairmint guys have been great to work with. The investment portal we have works really well, and clearly we're able to raise funds on this model. So it's pretty great.
Can you talk about how many investors make up the 165,000?
Yes, so I believe it's 7 at the moment. So, you got your 1 or 2, significantly larger ones, and then some that were, a little bit smaller. And none of this has come from VCs yet, by the way. It's, we're talking to VCs as well, but they actually take a lot longer to make their decisions than individual customers who already know us.
And what's been the interaction like with those 7? Just in terms of how much back and forth, was there the email? What's the process?
There was one investor who, after investing, then had a few questions about the cafe model and how it works, and so we went back and forth on that. But the rest of them did not contact us before investing.
Cool. That saves a lot of time.
That's pretty cool.
Okay, but let me point out something here. So it saves a lot of time, but these investors, the ones that are customers, we've been nurturing those relationships for over a year for each one of those, and so it's we're putting our time into those relationships with people who really get it, and in return they want to be part of our mission and share in our success, and it's a beautiful thing.
If I may add something here, that's a key thing. Is like most VCs, they are not customers of the business they invest in, so they need external signals to be able to pull the trigger and to invest. While your actual customers, they know you, they see the value, they love what you're doing, and so this is why like it's a continuous offering enables them to immediately boom, say, okay, I like what they do, I see the value, it is valuable, I'm going to invest. They don't need to wait for external signals to be convinced.
Okay, that makes total sense. So we're going to open it up to Q&A from the audience again. If you have a question, please put it into the chat or Q&A, and you guys don't have to answer the questions because we'll bring them up so that they can participate, ask the questions themselves, and then when people watch it on replay, obviously they can't see the Q&A that we're typing in when we answer. So our first question comes from Spencer. So Spencer, if you can unmute and open up your camera.
Hey guys, thanks for hosting today. This has been really fun. I've been researching you guys for a while and actually I live in the United States and actually wanted to be an investor. And of course I ran into the accredited investor regulations in the United States, totally understand that. Just wanted to get some of your guys' insights about where those regulations are based in and what your thoughts are on them today and what the future of those regulations could look like. So
that's a great question. And so obviously the accreditation rules, like there's nothing we can do about it, right? The only thing Fairmint does is we take the rules as they are and we just try to make the experience 10x better. But like we cannot change the rules. And so this is why like regarding accreditation rules in particular, so there's really two things. First, most of the time, like when we talk to customers, what they really want to do when they're talking about letting non-accredited investors invest is they want to make sure that key stakeholders are able to get a hold on their equity and be aligned with their success. And so there are other ways to do that than just like letting non-accredited investors invest. And one of the big one is Rule 701, which enables a company to compensate its key stakeholders who provide real value to the company using equity. So that's the first thing. And stakeholders don't need to be accredited to receive that equity. And second, this is where like Joris was saying before, like once after a year, because obviously all of this, what we're talking about is a private offering. And after a year, the company can elect to like start a secondary market. And on the secondary market, non-accredited investors will be able to purchase equity also. And yeah, and then like there's also interesting development. Like we have nothing to announce yet, but there's interesting development on the RegCF side. RegCF was not a great framework to work with until recently, but like the SEC has made some amendments that might make it better in the future. So we'll keep an eye on this too.
Spencer, I'd just like to add that this is a sore subject for me too, because many of my friends reached out right after we launched our GFI offering, and I had to turn them down as well. And also, as a founder of a young startup company, I'm not accredited either, and so I can't invest in Fairmint, even though I would.
No, I appreciate the connection with the secondary market. I heard your comments about that earlier, but understanding that once we do move to that secondary market, it is free for the general public. That's an important connecting of the dots for me. Thanks, everyone.
Yeah, thanks, Spencer. So our next question is going to come from William. William, you can unmute yourself.
Hi, everyone. This is a fascinating discussion. I'm really impressed with this innovative approach. And I am an investor in Gilded. Hi, Gil. It's great to see you.
Hi.
And,
Good to see you.
Great work. I just have a couple of questions. First, you talked about this issue of being an accredited investor or not. But what other regulation? I mean, the securities industry is very heavily regulated. And have you fully vetted this? And do you know what regulations are, sort of cover what you're doing? And what are the landmines? What are the risk areas?
So I can answer for Fairmint, but like we work with 2 securities attorney, they are pretty good, if not the best. So yes, we're very, 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 very strong on the legal side, and it's like 100% white. So I on this aspect, like there's really nothing like because we're issuing securities. So we help our customers issue securities, so investors are protected by the fact that those are securities, and all the legal, we've put a lot of money on making the legal extremely solid. And so here, there's no, if you have an idea in particular, where you that you had in mind?
Yeah, well, I mean, one of the reasons why accredited investors are required in this startup investment is because they aren't marketable securities. But you're saying that you really are creating securities, and you've talked about the ability to trade them. So,
So the ability to trade them is actually in the US right now, the secondary market technologies that we want to use, which are the AMMs. So the SEC has not yet said an official word about them, right? So the only thing, and this is what we told, for example, Gilded when they asked us the question, is the only thing we can tell you is that we make sure that not only you don't fraud, but you can't fraud, because every securities law is being encrypted, developed in the smart contract. So we enforce it at the blockchain level. So we respect the law, and we respect the spirit of the law at every single level. So this is why we're extremely confident about what we're doing. Yet, the SEC has not yet said, okay, that's good. All this automated market making mechanism, we fully support them. And so there are still gray questions that are unanswered by the SEC at this moment. But so the worst case scenario is what? The worst case scenario is if the SEC decides, no, that's totally unacceptable and we should not have US investors touch AMM, which is unlikely, then the worst case scenario is, okay, you have to list the GFI in case of Gilded in centralized exchanges that are regulated and that support digital assets.
Yeah, on
Okay,
the legal side also, in the US, what's pretty comfortable for us was that it exists really clear exemption. There is a matrix with all those exemptions that the SEC published, where all the rules are very clear, and if you just build something like what we are doing, and you respect everything, that's very clear. We started to discuss with a securities lawyer in other jurisdiction, and it seems that this is a great work that did the SEC on this end, because it was really obvious when you read this exemption matrix where you can literally navigate, and that's not the case in many other jurisdictions. So this is probably what helped us also to build this strong legal backend where we rely on now, so that whenever we have a founder coming to us requesting to do a very specific exemption because he worked on that with his lawyer, then all the rules are pretty clear to deploy in our software. And so when Thibaut say we can't fraud, well, it's basically because we set all the rules in the software. And so that means that if you are accredited investor and the company is running an exemption that require the accreditation, then you will go until the moment where you can invest. And if you are not, well, then you will have to wait for the launch of the secondary market to get a chance to purchase on those secondary market, or you will always be able to spend time for the company, where the company will have the opportunity to compensate your time with securities of the company.
Okay, William.
I have another question, but I'll get back in queue, let others.
Okay.
You just bring me back.
Thank you. So our next question comes from Michal.
Hi Lou, hi Joris, hi Thibaut. Good to see you all. So not only I'm a big fan of those two guys here, Joris and Thibault. And Gil, I don't know you yet, but I love what you're doing already. So big fun that when Thibault published his first white paper or note about the continuous organizations, which are really at the core of what Fairmint is today, it was like 3 years ago, almost 2.5 years, 3 years. I contacted him like 2 days later. We have to talk. This is awesome. So I'm so happy that you're.
That's when I contacted him as well, I think.
Oh, really?
Same.
There you go. That was like, God, that's incredible. So the great news is, first of all, you guys have something that's up and running. So congratulations for the amazing effort you did. Second great news for us is that we hope to be the next company to launch a cafe with you. So for us, I think what we're realizing is when you talk about that to people in the market, they kind of open their eyes big and say, what are you talking about? And it's so much easier to talk with non-investors because they kind of get it. It's, oh yeah, that's cool, easy. I go there, I click it. It's much more complicated when you talk with investors because they have their mental models and their maps about how things should be, and they don't necessarily like to, be challenged in the way they do it. So I guess for us, what's great is to have many more companies coming to you guys, and for you it will be great as well, and do cafes, because that will democratize much more the model. So since you became more visible in the market, how do you see your the number of companies coming to you to request information? How do you plan to add more companies, and what's your selection process?
So clearly, right now on the product side, and this is why we're still very selective in the companies that we choose to work with, is just because we still have a lot to automate to make it like a self-serve thing. So that our goal at the end of 2021, companies should be able to go on Fairmint and just self-serve in a pure SaaS model. Okay, I want to launch my continuous offering, and we should barely be in the loop. So right now this is not the case. So we still have as Gil could see, we do a lot of added value on every single continuous offering that we set up. But yeah, so this is a matter of months before we can ramp up a lot more companies. And then on what you're saying, I think one thing that is key, the goal of Fairmint is not to become an alternative way of fundraising. It's to become the way of fundraising. And so this is why, and this is what we're doing with Fairmint. We apply this intolerant minority rule. The only way to invest in Fairmint is through our cafe. So there's no discussion. Maybe you want to invest in the cap table, but yeah, go on another company. If you want to invest in Fairmint and capture the growth of Fairmint, the only way is to invest through our cafe. And so that also solves a lot of questions. And as you mentioned, is this would be a problem if nobody would invest. But the thing is, yeah, there's a lot of people who are keen to invest. And so we had an example with a VC. So because we start having VC investment in our own cafe offering. And so that's great, but it kind of shakes up a little bit their process, because one of them, I remember in particular, they started their due diligence. The price was, I think, at 3. And then while they were doing the due diligences, they were seeing the price go up and okay, 3.1, 3.2, 3.3. And then they were hey, the price is going up pretty quick. And they were yeah, well, we cannot do anything about it. It's just open for anyone. And so they kind of had to speed up their process so to be able to secure a good price. And so that's I don't mean bad for VCs, but I think that's how it should be. The priority should be to the founder. Founders should be here to focus on their business, develop their company, grow their company. And if people want to invest, then they should be able to do it on the side without taking away a lot of time from the founders.
Can you just touch for a moment, because obviously right now there's no selling, right? So every order is a buy order. So every order, I guess, incrementally pushes up the price. So how are you thinking? How are you going to handle when you flip the switch and now people can sell? Is there going to be any any gating factors, or just okay, sell, and if the price?
this is where DeFi is great again, because like all of this, what we need is already existing on the market. And so basically what you're saying is that, yes, the first year, the price discovery is only on the upside. Like people buy or they refrain from buying, right? And then like when the secondary market is going to be launched, so right now things change very quickly in crypto. So it might change, okay? Like don't take our word for it. But if we were to do it right now, we would use like the balancer liquidity, like bootstrapping pool, you know, where you would basically start the secondary market like at the current issuance price, and then the price would go down until like there's an equilibrium is found. And so when you start the secondary market, there has to be a short period of time where like there's this discovery price, this price discovery mechanism, and then like you just have your secondary market.
And
Yeah,
so,
I think to complete also on Miai's question, I think we see a big change on VCs as well. Since several years, we see so many operators that start their own fund, and they don't work the same as previous VCs were working in previous decades. Literally, they invest with more emotion, more intuition, and they don't have the same process as well. They like the product, they go and they invest. They don't focus on the same terms as well. So it seems to me that this is also a big shift that is happening, because there is so much capital that is coming from so many smaller funds than before. It also means that all those people, they are here to make sure that this product, this service that they like, will live, and they want to make sure of that by deploying their own capital, focusing on the financial upside, and for the comparison with like how we educate investor, I would say that we see it every day, like what happens with hedge funds that were used to short companies and that are now learning that literally some people can go against that and can change and flip the table, like change the deal. This is huge. That's probably what also we expect to see with the cafe, mostly because 30 years ago, for example, when in term sheet, it was obvious for VC to add the requirement for an employee stock ownership plan to make sure that employees would be retained, and all those talent will stay in the company and would get a stake. I think in 21st century, one of the best competitive advantage that you can build is retaining your community, turning them into brand ambassador. This is also key for VCs tomorrow. If they invest on the cap table on a company that rely on communities, how can they make sure that this community will be the strongest one? And probably that's how the adoption of the cafe will be obvious for them as well. So this is all those small data point that we've been learning since several months, seeing all the move from the old VC market into what we see today with what happened, like NFTs, the social tokens, but also on the equity, as soon as we allow founders to issue true equity securities using the blockchain.
so did you get your questions answered, Miguel?
100%. Thank you very much.
Terrific.
I'd like to catch up later with you, Gil, as well.
Thanks. So Gil, let me ask you, and this has kind of been a little bit of a love fest, which is fine. But I'm sure as you went through the process, did you give them any suggestions, or you want to now give them a suggestion, and it's early on, about the process and what you think they could do to make it even better?
Well, the unfortunate thing about fundraising is that you can't, as an entrepreneur, fully outsource it. You have to truly understand both the fundraising mechanism that you're using and the way to pitch it and present your company to make it investable. And also, by the way, you have to have a company that is investable. And so those things will not change, and they are still a requirement. I can say, honestly, that there were still a couple points, leading up to, when we were pretty close to launch our fundraise, that I was still trying to wrap my brain around a certain a couple of specific points about how it worked. And that's coming from a background of, understanding the SAFE, being comfortable with that, being comfortable with, cap tables and all that sort of thing. And that's not fully going to go away. You still need to understand that stuff. And so I think it's important for people to realize that. In terms of, our usage of the Fairmint platform, because this is new, we actually engaged our own lawyer to spend quite a bit of time looking into this. We trust these guys, but of course we had to do our own diligence.
Trust but
And
verify.
we did spend a while, probably a couple of months going back and forth on things. Now, I think in the future that this is going to be streamlined as this becomes more accepted. The answers to the questions that lawyers want to ask, will become known and they will be easy to present. We will also learn for ourselves and, with Fairmint, better ways to present this where people get it a lot sooner. And I think that those are things that need to be improved. Like someone said earlier, when you're talking to a traditional investor about this, it's much harder for them to wrap their brains around it than it is when you're talking to one of your stakeholders. And so if you plan on using, if you plan on continuing to work with venture capital investors, you still need to be able to, educate them about how this works. Some of them will love it. The ones who invested in Fairmint so far love it. Others will be resistant to it. We talked to a VC recently who was interested in us, and they said, well, typically when we invest in a company, we like to take 10% of the company. And we said, well, we have a 10% CSO pool, but you won't have all 10%. And, that was kind of a deal breaker for them at the moment. They left the option open later, but you will encounter that. And that's okay because, again, your customers here have the opportunity to be your big supporters. In terms of like the technical aspects of the Fairmint platform, yeah, there's a lot more that I'm sure they will automate in the future, but it already works pretty well. And, for the few little things that we needed help with, they were, super fast to help us. So I can't say anything, negative there.
No, I wasn't asking you to say anything negative, but just some helpful hints. Just a couple questions, you guys, on the business model. One is you talked about getting $50,000 in the cafe. At what price is that? And another thing you mentioned was the shorting. Is that possible on the platform?
So the price is like as an entrepreneur, like our customers, they decide of their minimum valuation, and so we just take 50,000 at that minimum valuation that the customers is setting. So and we don't challenge that. Like it's just like this is your minimum valuation. We take 50,000 at that minimum valuation. And then on the shorting, so right now you cannot short, but I'm sure, like being DeFi based, I'm sure a lot of people will be very happy to come up with products to short the stock of a company.
Let's not give them any ideas.
No. Shorting should be banned.
Yeah, it would be like if you have two football teams and you could only bet on one, you couldn't bet on the other, right? It's actually, if you actually believe in free markets, then shorting, that's all part of, giving people the opportunity.
Yep.
I think other people in the market should have the opportunity, if they want to do what the Robinhood guys did to them. That's all part of the fact that at the end of the day, there is a massive casino element to the whole stock market thing.
The thing is, I think the big takeaway also from because I think not a lot of people focus enough on like what stocks have been like saved, like AMC, GME, and all, and I think it's a big message from customers. Like it's like these are companies we love, don't touch them. And I think this applies to Fairmint. It's like the ones who should pick the winners in the market are customers. They are not VCs, and we allow this, right? And so I think that's it doesn't mean that VCs cannot help pick the winner, because obviously like when you're Clubhouse and you just raise a tons of money, so that means that, yeah, like you get a head start in being the winner. But like I think there should be more symbiosis into like, it should be like VCs and customers together who pick the winners.
Okay, that makes sense. I like that. So look, thanks a lot, guys, for coming on the show. We just got a couple minutes left, and I'd like to finish the show by giving the the guests an opportunity. Just if you want to leave your the people on the call with just one more piece of information about your company and what you're up to, what would you like to share with them, and how can people get in contact with you or your company? Gil, you want to start off?
Sure. My email is gil, G-I-L, at gilded.finance. You can also visit gilded.finance to learn more about us. There is an invest link in the top navigation. So if you're interested in investing in GFi, you can find us there. And also on Twitter, I'm Gil to the rescue.
And what about giving a commission, guys? If I drive people to go to gilded.finance, is that on the roadmap? I'm just kidding.
You need to be a broker dealer.
Yeah, that's my standard answer. I'll have to check with the lawyers.
So Thibaut, Joris, what's the last comment you guys would like to have?
I think to conclude, the vision that we have is clearly to have as many companies having the widget powered by Fairmint on their website, so that they can turn all those stakeholders that are in their ecosystem into owners. And that's probably what's key today and for the next decade. We will see a huge trend of people that will literally jump to become owner on all those companies. And I can't believe that the next Airbnb, the next Uber won't be a company that will use something like Fairmint. So it's really obvious today that anyone that is listening today can contact us, discuss with us, but at any time we will always be able to push this idea of a stakeholder capitalism. Yep.
And if you believe in that mission, same, like you can go to invest.fairmint.co and front run Fairmint's hopefully IPO on Fairmint.co in the coming years.
Excited. Thanks a lot, guys.
Thanks a lot.
Thanks, everybody.
Right, thanks, Lou.
Thanks a lot.